Good evening. This is the Elliott wave update for the S&P 500 for Monday, November 29th, 2021. The S&P followed analysis from yesterday very cleanly today, much more cleanly than the Nasdaq did, let's say. So beginning with the fact that I'm still counting a corrective decline in its very beginning stages, and that is off of the all-time high at 47.40. And within that, it appears still that we have come down in the first five, and that I labeled as minor wave one. And then we had a beautiful ABC rally, and that was minor wave two. And then we had the drop, and the drop that we had on Friday. And that I labeled as minute wave one of a minor third wave. That is staying in place. So what my anticipation was off of this is exactly what I'm seeing. It is a three-wave structure thus far. It appears that this was A, here is B, and now we're in a C wave rally. And of that, one of C, two of C. Just give me a chance and try to open that up. I don't want to do it. There you go. I want to look inside this. 1, A, B, 1, 2, 3, 4. Yeah, one little bit of an additional rally, a new high above 4669.75. So just need to go up and touch this 200 moving average, the hourly 200, and maybe get up to 4675.76. That will complete, in my mind, the ABC, or at least it'll be a 5, 3, 5. Now, many things can happen coming out of that, but my expectations would be that it is forming and going to be a wave two. I want to go back out to a little bit longer term chart. So this is on the 30-minute chart now. We've just reopened in Globex, and we are deciding we're going to be up a little bit. And that actually fits because I do believe we need to have one additional rally, get itself above what I just said at 46, come on, right there, 46.69. So get to 46.70 up to 75, completes the ABC. Now, what else it could be? If it's a 5, 3, 5, that can complete the wave two. But if it comes then off of that level, from wherever it tops out here, comes back down in 3 and then rallies again, it is now going to turn itself into a 5-wave structure versus a 3-wave structure. And we're then confronting a different type of a picture. And this would then most likely be left as an ABC. And then that would then suggest that we're going to go back and move this and likely this. For sure this, because I believe then what happens is, like if I explained in the Nasdaq, if the market goes and leaves this pattern as a 3 waves down, it's corrective. And if this works its way into a 5-wave structure up, it's going to be impulse. And so the impulse would still be up, and that would conclude that the overall larger advancing sequences still have more room to go. Now, this is not putting a who's right, who's wrong. This is interpreting what the market is doing and basically telling me. And that's via price action, that's via Elliott wave counts, that's via the Fibonacci relationships, the moving averages. Put that all together, the picture is thus. So better to know that you have breakdowns. If you're using this analysis because you're wanting to put on a position, but maybe a position in the spiders, or a position that involves options and strikes further out, and so your timing to where the market may or may not be would be beneficial to your position. So we are sitting at a point where it could go to new highs. This could all revert, just keep going up, and we'll head for new highs. If the change and the count is because it's a fluid market, it changes all the time. So we give both sides up a picture, and the market's going to tell us which one it intends to do. So presenting two sides of the picture is actually not a bad deal, because this is what you would look for if the market goes up. This is what you look for if the market goes down. So if the market continues to go up, I'm looking for possibly one new high, possibly right in this area, 46.75. I would not expect it to get up close to 47.17, which is the high and the starting point of wave one. So if it does, it could roll over and it would be very clean, minute wave two, corrective bounce. We would then begin to start to drop in a minute third wave of a minor three. So it would be a 3 of 3 move. Now, characteristically, this includes markets begin to accelerate in the direction, and the direction is down. They begin to accelerate down. They start to break below support. They start to break below moving averages, and they keep on going. So the speed, the volatility all gets pushed higher. We are moving and we're going in one direction. It would be very similar to what we saw on Friday, but double it, because we have 6 hours up instead of just 3. So, the Dow was down 900 within 3 hours on Friday. So that's fairly strong move to do in 3 hours. So that's what I would look for. That's what the expectations would be if it is going to turn and go down off of a minor wave two. The alternative to that is that we're building a stronger 5 waves up. And if that's the case, then we run the very strong possibility that this 5 will be out, this 5 comes over to wherever this ends, the 3 gets moved up to here, and the 4 gets put down there. So it's a change on the minor degree level. And it would make what came prior to this, the minor third, it would be a kick butt rally, and it was very extended. So, and it would fit, because I did it in the Nasdaq, and it fits for the Nasdaq, and therefore it would fit with the S&P, because they're basically running the same count. This particular case, the S&P has much more room for upside than the Nasdaq does. So this count remains in place. If the market is intending to go up, I believe it comes up here, it creates this new high, and then corrects one more time. Because here again, it'd be 1, 2, and then I've got a 1, 2, 1, 2, 3, 4, 5, a 3, 4, 5. So yes, it can get up into here for sure, and complete a 5 waves. And then if it rallies down 3 and then comes up again and then breaks above 47.17 in a 5 wave structure, then it's changing the picture. Then it's no longer a minor, or excuse me, a minor wave 2. So that's the other side. Downside, we'd be expecting for it to break pretty easily and start to come down with some speed. Upside, pretty much the same story. It's got to go. It just goes, gets above here, and it just keeps going. And it's likely going to be fueled by the players, the Tesla, NVIDIA, Netflix, Microsoft, Intuit, Google, Facebook, Coin gets in there, Amazon, AMD, Apple. Those are the big titans, and they're being pushed, and it's options of trading the options, and the options are telling the story as far as where that stock is headed. And because they're doing it on a weekly basis. So we have the weekly options that expire this Friday, the first week in December, first expiration of December. So we have all these weekly expirations, with the monthly coming in on December 17th. And then we have holidays, then we have quote unquote Santa rallies. This is all status quo stuff, and it may just really show its ugly face and come in. So do not discount the status quo just yet. That, oh, we always have a Santa rally, that we always go up, that Christmas, everybody's out there buying, so retail sales should have an uptick. We should have a good look going into 2022. And it's like, okay, they may just do that. Whether it's true makes no difference. Pay attention to how things are going to be trading. That's all. So we have both sides of the coin, and we're moving into the end of the year. So for tomorrow, I've given upside, I've given downside. Downside breaks, definitely, if it really gets itself going, breaking below 45.77 should not be a problem. Same deal going up. If this thing is intending to go up and just keep going, 47.17 should not be a problem from current levels. It would be a fairly big rally, but not out of the realm of reality. Okay, so trade smart. Do not get married to any position. Do not try to pick a top. Do not try to pick a bottom. It sometimes works, and maybe it could be a good scalp. But on a position trade, saying that that's it can be rather dangerous. As we witness in both markets, in all the markets, we witness these wild, volatile rides. So it's much better just to kind of day trade and try to play them all. There's plenty to trade, and it's good trading. Don't get married to it. Don't get stuck on a bad position. There is enough volatility, and the volume was there today that the market moved, and it moved well enough to make up losses. So you just could not get attached to them. Okay, that's going to be it for today. And our next update will be on Tuesday, the 30th of November.